Good evening, one and all students. Welcome to our LVC for the subject of direct taxes. I can see many new names. Yes, very good evening, Soumya. Good evening, Almas, Priya, Ritika, Anubhav, Ramchandra, Pragya. Pragya has a question. Sir, I've recently started my preparation. This is the first time I'll be attending live. Basic concepts के lecture मैंने देख लिए, but salary के lecture नहीं देखे. That's fine. Yes, hi Tanu, Astha, Shri Hari, Rehana. Very good evening to all. So good. Students, this is our first session of income tax. We have already met for other topic. So let me just have a brief start about the subject. Then we will come in particular to this particular topic. So you all have started studying the subject of taxation, right? Now I have some interesting questions to you all, which will just set the tempo for our today's deliberation. So our topic is income tax, which I'm sure by now you all know what is income tax. It is a direct tax. And as compared to this, you have another topic, which is GST, which is indirect tax. When you come to finals, you also have another indirect tax, that is customs. Also, you all would have heard that now we have a new income tax act becoming applicable from the next year. It is already presented. So these are some very interesting points. Now, I'm sure everybody of you all know what is a charging section in a taxation law. Firstly, do you all know what is a section, what is a subsection, what is a proviso? Do you all know all these things, students? So share with me your input so that I'll be in a position to understand how much basics of the subject you all know. Even if you do not know, that is fine. That is why I'm starting from very basic. So if anybody wants to know something you're not knowing, please let me know. I can start from there. So my first question was, do you all know what is a section, subsection? Excellent. People are saying yes. So now coming to the next question, do you all know what is a charging section? Okay. Charging section means a section which allows the tax to be charged. Okay, good. Anubhav. So basically, students, charging section, yes, Astha, you're right. So in any taxation law, this is the most important section. It is the section which imposes the tax, which levies the tax. And when I'm saying it is levying the tax, it is also defining when, how, on what the tax would be levied. Like if you read the charging section of income tax, which is section 4, it says that tax would be levied annually. So when it is levied annually, second, on what it is levied? It is levied on every person's taxable income. If you go to customs law, it will say it is levied on the import or export of goods. If you go to GST law, it says it is levied on the supply, which may be interstate supply, intrastate supply. So a charging section is that section in the taxation law which creates the charge of tax, which imposes the tax. And when it is imposing the tax, it is also defining when, on what the tax would be imposed. Now comes the next connecting point to this. When I say on what the tax is imposed, that what is called as the taxable event. So there are two things to be understood in a charging section, the taxable object and the taxable event. Like in case of customs, in case of GST, what is the taxable event? The taxable event in case of customs is importation, exportation. In case of GST, it is supply. What is the taxable object? The taxable object in case of customs is goods. In case of GST, it is goods or services or both. So object in Hindi is that vastu on which tax would be imposed. Event is the happening of some action happening of some event, in accounting sense happening of some transaction, which will trigger imposition of that tax. Like in case of customs, it is when you import the goods, that is the trigger. Or when you export the goods, that is the trigger. Similarly, in case of GST, whenever what you are doing fits in the definition concept of supply, that is the trigger. So these triggers are the taxable events. Now, our topic is income tax. That is why I purposefully did not give you example of income tax, because that is what I want from y'all to know. So my first question in income tax charging section is, what is the taxable object and what is the taxable event? Taxable event is that transaction event, the happening of which will make the levy. The object is that vastu on which the tax is levied. Okay, Deepika has given an answer. Tanu has given an answer. Soumya, Astha, Priya, good. So the taxable object is income. The event is earning of that income. Superb, Anubhav. So what is the charging section saying? It says that whenever there is an income, the tax would be levied on this income, and the trigger is earning of this income. So the moment you earn the income, there is a tax. If you have accumulated the income, which now becomes wealth, like every year I'm earning something and it gets accumulated in the form of bank balance or in the form of shares or in the form of property, there is no tax on this accumulated income because the taxable event is earning. So when I again earn something, there will be tax. Again, when I earn something, there will be tax. And that something should fit in the definition of income, which is given under section 2 bracket 24 of the Income Tax Act 1961. I hope this is clear. Now I come to the most interesting point, for which maybe you all know the answer, but I believe you all do not know the answer, or the answer that you know is very mechanical, very theoretical. The question is, we say that income tax is a direct tax, and we say GST, customs, or the earlier excise, sales tax, service tax are indirect taxes. How do you know that whether a tax is a direct tax or a tax is an indirect tax? How will you know whether a tax is a direct tax? So let us say tomorrow new tax comes. How will you identify whether this tax fall that would fall under the category of indirect? Let me tell you one thing. Nowhere in the act they say that this is a direct tax or an indirect tax. Okay. I'm happy to see many answers, many inputs. Miss P. I don't know who is P. I think P is not a name. Is your name only P? Please put your name. Let me be able to address you by your name. So Miss P says, who bears burden? Ramachandra says, I missed direct taxes charge on income, indirect on goods. Shri Hari says, tax on supply of goods service is indirect, on income is direct. Burden of tax can be shifted. Okay. Direct tax levied on income, indirect tax, direct tax progressive, if tax is levied on income, direct. See, is it necessary that only when it is levied on income it is direct? Because presently we have income tax. Earlier we had something called as gift tax, we had wealth tax. There are other examples also of direct tax, and it is not only on income, right? Okay, Dhanush has also given a good reply. Rehana has also given a good reply. Okay, Bunnypreet, good. Kirti, direct tax is directly collected from persons. So indirect is also collected from persons only, na beta? Or you want to say something? Oh, acha. No worries. I'll remember. So you are Smriti. Good. Okay. Good. Now, let me tell you how you identify a direct tax and an indirect tax. Let me share something with you. So I'm sharing my screen, and before I come to the PPT of today's topic, let me take you to the act. I'll request everyone, please download this act. It is from the means it is a shortcut I've created. See, I'll show you. So this is my what am I doing? See, this is my Google, and here I have created a shortcut. So whenever I want to refer the act, I have to simply double click it and this will open. Fine. Now, what I want to show you all is how do you identify a tax as a direct or an indirect? Okay. So I'm opening firstly the charging section of income tax. What does it say? Let us read. Because charging section is the section which makes you understand or realize whether the tax is a direct tax or an indirect tax. Achha, one thing. How many of you all have read section 4? You can just say yes, or how many of you all have read section 4? Obviously from book. Yeah, fine. Excellent. So if you all have read, I can take the liberty of directly asking questions. So section 4 bracket 1, it says where any central tax enacts that income tax shall be charged for any assessment year at any rate, income tax at that rate, those rates shall be charged for that year in accordance with subject to provisions, including provisions for levy of additional income tax. This act in respect of total income previous year of every person. Okay. Now, my question. The charging section says where any central act enacts that income tax shall be charged for any assessment year, income tax at that rate or those rates shall be charged for that year. Now, I am not able to understand what is this central act they are referring to. What is this central act they are referring to? Priya, is it a question to me or is it your answer? Anubhav, your answer is very open-ended. You are saying act passed by parliament. Obviously, a central act has to be passed by parliament. You have to name the act. Rehana, very good, beta. Tanu, if you are saying income tax act, then you are already reading income tax act now. It should have said this act. If it wants to say income tax act, it would have said this act. Like it has already referred to it, income tax act in other places, it will say this act. It will not say central act. Priya, good. But I did not get your point. You are saying it is an answer now. Means what? Anubhav, no, it is not income tax. Kevin, you're right. Good. The best part is even in the evening, you all are active. You all are responding promptly. So it is making me go deeper. And I hope you all are able to connect with whatever I'm trying to explain. So let me take you to something. So this is what? This is the Gazette. where notifications are published. This is your last year's budget, the finance bill which got converted into Finance Act. Now, interesting, you will see it is named as number 2. Why? Because I am referring to the act which was passed in August, that is after the formation of the new government, but before the elections in February, which is the normal date of presenting the budget, we had the first finance bill, which became the first Finance Act. And since in the same year you have the second finance bill and the second Finance Act, it is called as the Finance Act number 2. Fine. What it says, Section 1, this act may be called as the Finance Act. Subsection 2, what it says, subject to provisions of subsection 2(3), for the assessment year commencing on this day, income tax shall be charged at the rate specified in first schedule, obviously, of this act, that is the Finance Act, and such tax shall be increased by surcharge for the purpose of union calculated in such a manner, etc., etc. So what it is it saying? Subject to provision subsection 2 and 3, which is given below, for the assessment year commencing on this date, income tax will be charged at the rate specified in part 1. So focus on the language. It is saying income tax shall be charged at the rate specified in part 1 of first schedule of this act. This act means the Finance Act. Now I go back to this language. What it says, where any central act enacts that income tax shall be charged for any assessment year at any rate, then the income tax at that rate or those rates shall be charged for that year in accordance with, subject to the provisions of this act. So, interestingly, see here when they are saying this act, it means the Income Tax Act, because this section we are referring to is from the Income Tax Act. But this act is referring to some other central act where what will be provided? Income tax shall be charged for any assessment year at some rate. And that is what is written over here. What it says, for the assessment year commencing on this date, income tax shall be charged at the rates which are given somewhere else in part 1, schedule, etc., etc. So the correct answer, which is rightly given by many of you all, is that it is the Finance Act, which is providing for the charging. Perfect. So you are understanding all these things, beta. So let us understand it from the depth and the core of the subject, so that as a professional, as a chartered accountant, you will be getting a thorough and complete knowledge. So please do not accept anything which is written anywhere. Even though it is written in some act, still you have to understand. When it says central act, your question should be which central act they are talking about, right? Yes, somebody saying she is as per Article 246 of the Constitution as per Schedule 7. No, beta. Srihari, see, understand, Article 246 read with Schedule 7 is not talking about this. That Schedule 7 of Constitution of India read with Article 246 of Constitution of India is basically distributing as to what laws Parliament can pass, that is center can pass, what laws state legislature, that is state can pass. So it is not this. Schedule 7 is only talking about the distribution of power. So it is not this, correct? But good. I'm happy that you are connecting with whatever subjects, topics you have learned till date. This is how you have to study. Now, we were on the point, how do you understand that whether the tax is a direct tax or whether the tax is an indirect tax? Now, when you read section 4, you realize that the Central Act enacts that income tax shall be charged, etc. It shall be charged for that year in accordance with, subject to the provisions of this act. Now it says, so they are till this point they are saying that income tax will be charged at some rate, etc., etc. Now they are saying it will be charged in respect of total income, which is the taxable object, then of which period of a particular year, which will be called as a previous year. And now this is important of every person. And the most important point is that, as rightly pointed out by many, the tax burden cannot be shifted. Means what? I have earned income. I have to pay the income tax out of my pocket. I cannot take it from your pocket and pay. You cannot pay my income tax. I have to pay my own income tax. But when it comes to customs, when it comes to GST, or for that matter, any indirect tax, there is nowhere mentioned as to who will bear the burden. Because, now pay attention, the most crucial point, indirect taxes are levied on the goods or service or the transaction. There is no reference of the person on whom it is levied. Here, the tax is levied with reference to the person, saying that your income will be taxable. Indirectly, they are saying you will be taxable or you have to bear the burden. In indirect tax, the burden is always shifted on the consumer or the person who is actually consuming the goods or service, or who is enjoying that particular activity or transaction. The burden automatically gets shifted to that person. So even though the supplier is depositing it with the government, finally he is collecting from the customer and depositing. In fact, the taxation law itself provides that it will be presumed that the tax burden has been shifted. So the most important point, the differentiating point, is in the charging section itself, you get to know that whether the person on whom this tax is particularly charged or created, can he pass on the burden? And how do you get to know? If you read the charging sections of indirect taxes like custom, it simply says tax will be levied on import export of goods, full stop, no reference of person. Similarly, when you go to GST law, it says that tax will be levied on supply of goods, service, or both. Only in case of GST, since it is domestic tax, there are alternatives given, like in some cases the supplier will pay, in some cases the recipient will pay, in some cases the electronic platform will pay. But that is where only they have shifted the responsibility of paying, not the burden. But the point is, nowhere it has created burden on any of these persons. So the point is, where the law itself is creating burden on the person, it is a direct tax. Where the law is not creating burden on the person, the burden is created on the goods or the service or the transaction. And when the goods service are shifted or passed on to the other person, automatically the tax on that gets passed on. It means the burden gets passed on. That is how you differentiate between a direct and indirect tax. So it is the charging section which will distinguish between the two. Fine. Now, once you have understood this, now let me take you further. Income tax law, if you have understood, it says that tax will be levied on what? Tax will be levied on the total income. Fine. So you have to pay tax on the total income. Now comes the interesting point. You all would have by now understood that even though tax is to be levied, like it is charged on the total income, but while computing the tax, we first bifurcate the income into 5 heads, 5 sources, 5 categories, and we compute the income headwise separately, or we compute the income source wise separately. So the point is, now what is my next interesting pointer or question? The law says, the charging section says that tax is levied. The charge is on the total income. Perfect. But we all have studied till now, or by now you all have known that while calculating this income, you will divide the income into 5 heads, 5 sources, 5 categories. What are they? Income from job or employment, which is called as income from salary. Then the rental income, which is income from house property, which we are going to study today. Then the business income, business or profession income, capital profits, which is called as capital gain, and all the remaining items under other sources. Fine. Now, if you know this, that the income tax law requires you to compute the income headwise, my question or questions relating to this are: one, the charge is on total income, but now you'll be computing income headwise or source wise. My first question is, how come, or as per which provision you have to compute the income headwise? What makes you compute the income headwise when the tax is charged on total income? What makes you makes you to compute the income headwise? My first question. My second question is, that if you are computing headwise, what is the benefit of computing headwise? That is why we should compute headwise when the law says that you have to pay tax on total income. Then why are we computing headwise? So two questions. What makes you compute headwise? What is the purpose of making you compute headwise? Anybody wants to answer or put in some point? Let me know what is your pointer. So why you are doing it headwise? Who has made you do it headwise? And what is the purpose of dividing the income headwise? Why can't we simply calculate total income directly? The charging section of the particular head of income makes it easier to ensure deductions, exemptions. Okay, good, Kevin. You are very close. Shri Hari, permissible deductions, 5 heads, their own specification, conditions. Perfect. So many of you all are answering the second question, that why we have to do it headwise. You all are correct. Every income have their own provisions, exemptions. Perfect. We need to compute headwise because in each head we get some exemptions. Okay, good. So Ishan, Dhanush, Astha, Anandruti, Shri Hari, Kevin. What you all are said is perfect. Smriti is saying headwise on the basis of source to avoid confusion. Okay. So firstly, I'll answer the second question because many of you all have answered the same. Why we have to compute income headwise? The answer is because every head has a different set of provisions. It has a different format. Like you all have studied salary. Now, what we are going to study in house property in PGBP, that is business income or capital gain, has nothing to do with salary. So the entire provisions of capital gain are different, entire provisions of house property are different, entire provisions of salary are different. So why we have different heads? Because the act wanted to give you different formats. The act wanted to make separate provisions for deductions, for exemptions, for tax rates. That is why the act has made separate heads and asked you to compute income head wise. Now, yes, Srihari, I'll answer your question. Now, so the Act wants you to compute headwise because the Act has made separate provisions for separate heads. Now, my next question, where in the Act they are saying that compute income headwise? So the answer is section 14 is the section which says that you should compute income headwise. What it says? Save as otherwise provided by this Act. All income shall, for the purpose of the charge. So what we just studied in section 4 was charging of income tax. Now section 14 says, for the purpose of this charge of income tax, and for the purpose of calculating the income, all the incomes, it is saying all the incomes have to be classified under the heads. And now interestingly, see how many heads you have. You have 6 heads, or I will say you had 6 heads. So there were 6 heads originally when the law was drafted. Later on, the second head is merged in the last head. So now you have only 5 heads. What was the second head? The second head was interest on securities. I'll just show you because you'll never be studying this. So I just want to show you. So let me take you chapter wise. So section, yes. Now see, 14 says that compute income headwise. Then from 15, you have the salary head. Then from 18 to 21, this head has been omitted by Finance Act. And what was this head? This was interest on securities. See, so the second head was interest on securities, which was deleted by the Finance Act 1988. Deleted means it is now merged with interest on, sorry, not interest on, it is now merged with income from other sources. So now we cover interest on securities in the last head, that is income from other sources. That is why this second head is no more existing. So today we have only 5 heads. Now, interestingly, the flow is beautiful. So 14 says, compute your income headwise. We just read this. And then you have sequentially the provisions for head. So 15 to 17 talks about salary. 22 to 27 talks about house property. This is what we are going to study today. 28 to 44. See how many A, B, C, D sections you are having. Up to 44. 28 to 44 is business head, which is called as profits and gains from business and profession. So PGBP is the short form. Then 45 to 55 is your capital head, even up to here 55. 56 to 59 is other sources. Fine. Is this clear? Yes, Kevin. Now, so we have understood all these pointers, that the charge is on total income, but section 14 says compute income headwise. So we come to heads, and as you can see, you have different set of sections for each head. Now comes the most interesting question. Section 14 says compute income headwise, and it has said that there will be presently 5 heads: salaries, house property, BGBP, that is profits and gains from business and profession, capital gain, and others. Now, the next question that will come is, if I'm earning some income, how will I come to know where my income will fall? How will I come to know whether I should cover the income under house property head so that the house property provisions, the format, the exemptions will apply? Or whether the same income I should cover under business head so that the format will change, the calculation will change, and everything will change? How will I come to know where my income will fit in out of these 5 heads? How will I identify? So now I am having some incomes. Now I know that as per 14, I have to put it under different heads so that I can compute the income as per the respective provisions of the heads. But my question is, how will I come to know which head my income will fall in? Ishan, I agree to your answer. Your answer is perfect. But what are those sections? Can you tell me? Example, maybe one or two. Rehana, I'm not saying your answer is correct, but I'm still doubting because you are saying basis of charge. So are you saying section 4? Okay, Anubhav, specify. See, always Anubhav, your answers are very broad. You have to be more specific. Ishan, perfect. Perfect. Astha, you are saying they have to be classified by their nature. This is going to be difficult. Yes, but when you are saying by their respective, so give me example, Astha. So many of you all have given me the perfect answer. How will you come to know that whether your income should fall in salary head or the house property head or the profits and gains head or the capital head or the income from other sources head? The answer is by looking at the first section of each head. Like salaries, the first section is 15. So the first section of each head is the charging section of that head. See, one, we had charging section of the entire income tax law, which is section 4. Now we have the charging section for each head, which will tell you that your income will fall under which head. So every head's first section is the charging section. So you have section 15 for salary, you have 22 for house property, you have then 28 for PGBP, that is business head, then you have 45 for capital head, and you have 56 for other sources head. So the first section of every head is called as the charging section of that head, because that is the section which will tell you that where your income will fall. So now answering my question, how will I come to know whether my source of income is salary or business or capital or house property? The answer is you have to analyze the 5 heads, 5 sections. The first section of each head you have to analyze, and on analyzing the all 5 sections, which are the first section of each head, you will be able to determine where your income is falling. If your income is not falling in any of the first four heads, then the possibility is it will fall in the last head by default. But having said this, let me also tell you that last head is not a dustbin. That is, other sources head is not a dustbin that what will not fall in other four will only fall in dustbin. Not that way. Other sources has also given its own charging section conditions. So whatever is satisfying other sources condition, that will also fall in other sources only. Fine. So with this background, we will start with our today's topic, that is income from house property. The sections that we have to study is the first section is 22 up to 27. These are the different sections read with relevant rules which are applicable to this head. Fine. So just give me a minute. I'll start in a minute. Okay. Now, as we discuss that every head has a different format, and that is why the law has created different heads so that the computation has to be done as per the specific heads format and as per the specific heads provision. So see the format of PGBP head, house property head. As you can see, the house property head computation is dependent only on, you can say, four values. First is the gross annual value. Second is municipal tax. Third is the standard deduction. Fourth is interest. Now see, this is how different heads differ in their computation, in their provisions. Like if you compare this with a PGBP head computation, which we'll study later on, in PGBP, there is no restriction on what expenses you will be deducting while computing that income. PGBP head is much wider, much vast. It can cover any expense which is related to business, obviously subject to some conditions. But that is not the case with house property head. That is not the case with capital head. That is not the case with other sources head in general, because the other heads, like other sources, even your present head house property, they have given you very limited, restricted deductions. This is how the provisions, the format, and the computation of each head is different. And since the law wanted a different approach of computing income of each head, that is why it created heads. Otherwise, there was no need of creating heads. It could have directly given you the format of computing total income. But for every provision, every head, you'll find a different format. Now, let us understand in detail the format of computation of HP head. Along with understanding the format, we have to understand one more thing. What is that? If I give you accounting terminology, because that will be easier to make you understand this point. In accounts, we have two approaches. One is the cash basis, one is the accrual basis. So either you can report any income or expense following the cash approach, where you will only take the cash incomes and the cash expenses during that year, and you will prepare your P&L. This is the cash approach. The second approach is where you have the mercantile or the accrual approach, which we generally follow because that is one of our fundamental assumptions, that whatever has been accrued, whatever has been earned in that particular period, whatever has been your expense of that particular year, whether paid or not, you will consider that while preparing your financial statements. That is what is the mercantile approach. Now, my question is, Keeping this particular analogy in mind, when I have to compute income, whether I follow cash basis or here I follow again the mercantile basis, or here again I have some fundamental assumptions like how you have in account that if nothing is specified, you assume mercantile. So what is the basis of computing income? Cash, mercantile, or same like accounts where nothing is mentioned, you have to assume mercantile. Students, what is the basis of computing the incomes? Cash basis, whatever is received, whatever is paid, you will consider that, or mercantile basis, or what? Ha, Smriti, good. Smriti is saying cash or accrual, whichever is earlier. Deepika, which language you are using? Which country's language is this? AERUA. What is? I cannot even spell it. Oira. What is it? I did not understand. What is your answer? Okay, mercantile, accrual, cash or due, whichever is earlier, cash basis, maybe. Anubhav, every time you give very open-ended answers. You never give specific answers. Okay, super. Ishan, good. So tell me further. You're right. So tell me further. Yes, students, the answer is for different heads, the law has provided different basis. Again, see why different heads are created, because so many things are different. Formats are different. What expenses you can allow, disallow, they are different. How much expense you can allow, they are different. And also the basis. Like for the head salary, the method of computing salary income is cash or accrual, whatever happens earlier. So this is a rule. But as Ishan rightly pointed out, this rule is applicable only for salary head. But when you come to house property head and when you come to capital gains head, for both these heads, the method is accrual with exception. Exception means in one or two cases it can be cash, otherwise it is accrual for house property and for capital gains. And then for the other two heads, that is business head, PGBP, or the other sources head, interestingly, the law says it is your choice. If you want, you can do it on cash basis. If you want, you can do it on mercantile basis. Interestingly, if you have multiple businesses, many people do have multiple businesses. For different businesses, you can have different methods. It is not compulsory that you should have cash for all or mercantile for all. You are given that option. So for business head and for other sources head, you are given a choice. Again, all this is with some exception. So whenever I say you have to take it with a pinch of salt, provision are there, exception not following this. Otherwise, this is the general rule. So what is the general rule? Salary, cash or accrual, whatever happens first. House property and capital gains, both these heads, accrual, and PGBP and other sources, both methods, out of both, you have to decide. It is your option, your choice. And all these rules comes with a pinch of salt, where the law itself has provided some exception that you'll understand when we go further. Understood? Clear, students? Any doubts up to this point? See, keep communicating with me. If you have anything to ask or say particularly, I'll unmute you, or keep on putting your responses, your answers, your doubts in the chat box so that I will understand that you are connected. We are in sync. Why it has allowed flexibility in those two cases? Ha, Anubhav, should I give answer in your method or format or my format? Because if I have to give answer in your format, my answer would be vague. If I have to give answer in my format, my answer would be specific. So let me first answer in your format. So Anubhav is asking, sir, why they have allowed flexibility in the two cases, that is PGBP and other sources, why they have given choice. So Anubhav, in your language, the answer would be Meri Marzi. So the law says by Meri Marzi, I am the law. I can do anything, right? But to give you more precise answer, beta, see, business head, in fact, look at accounting. Accounting also has this option. I'm sure you all are knowing this, except for companies where it has been made a compulsion by the company law itself. Accounts itself is giving you option that if you want, you can follow cash basis. If you want, you can follow mercantile basis. Why account itself is giving you option? Because when a person is doing business, how to compute income of the business, that is what is your profit or loss, cash basis is also fine. See, in fact, if you ask me personally, now I'm answering on personal basis, I will prefer cash basis in today's scenario, because what I have in my hand is what is true. What is there only ki, okay, I've sold you something, I've provided something to you and you will pay me in future. What is the guarantee? So the point is that it is about approach. In businesses, there are different types of businesses. There are different scenarios in which businesses are done. Some businesses are in unorganized sector, some are in very formalized sector. So considering all this, it is very important to have this flexibility. So this is the precise answer, that why only for business head and other sources head there is flexibility. Why not for others? Because for others it is not required. But for business head, because businesses are of multiple types in multiple scenarios, hence it was more prudent for the law to think that let me provide the option to the assessee, because a businessman should decide how he wants to run the business and how he wants to consider or calculate his profit. Fine. Now, coming to our present head, which is the house property. And as I already mentioned, the house property head is to be computed on mercantile basis with a pinch of salt. That is, there is some exception. What is that? That you'll get to know immediately. Now, the format of house property is very specific, very short. Means what? Anything and everything relating to house property will not be considered in computation. Like, you are spending something on the repairs of the house. There is no scope of deducting the repairs in this format. So, meaning thereby, generally what should be a normal logic of computing any head income? Ki bhai, whatever I've earned from this head and whatever I've spent for this, let me add and deduct that. Whatever I've earned, let me add all those items. Whatever I'm spending on that, let me deduct. That will be my net income from that head. But this is not applicable for HP. This is not applicable for capital gains, because both these heads have given you very specific deduction. What can be deducted and up to what extent. So two things they have given very specific: what can be deducted, that is what expenses, and up to what extent, that is up to what amount. So they have been so much specific, and that is what is the beauty, that different heads have different format and you have to strictly follow and stick to that format. So firstly, it says you take GAV. What is GAV? We'll discuss from that. So for the timing, I'm saying rent, right? Whether it is rent or not, that you'll get to know further. But for the time being, I'm saying rent. So first find out the rent of that property. Then from that, deduct the municipal tax. Now, interestingly, I just mentioned this head is to be computed on accrual basis. So all values are on accrual basis. However, with a pinch of salt, what is that pinch of salt? It is municipal tax. So we all know municipal tax. In Hindi, we call it as Ghar Patti. Every year you get it from your local government where you have to deposit that. Now, this municipal tax will be deducted because it is your expense, but it is deducted only on cash basis because the law has specifically used the word municipal tax paid. If something is not paid, if municipal tax of this year is outstanding, that will not be deducted. Second most important point, it should be paid by the owner. Now you'll say, sir, what is so special in this? Why this condition is given, or what can be the other side of this? So the answer is, I am the owner of this property. I have given this property to you on rent. So you are my tenant. Now there is a possibility that between us, it has been agreed that whatever is the municipal tax, you will pay. And you agree because you need my property on rent. So I have dictated the terms and I've said that you are giving me my rent. And also whatever is the municipal tax, you have to pay it. In this scenario, the law will not allow you to deduct it. Reason is this particular head, as I said, is very specific and precise. You have to strictly follow what is given in the format. So the format says first it has to be paid and it has to be paid by the owner. So when I'm computing my house property income from the rent, I will deduct only that amount of municipal tax which I have actually paid during the year. If somebody else has paid, I cannot deduct. If I have paid but I have not paid in this year, I have paid in the next year. In this year, I cannot deduct. This is the point. Now, after deducting this, you get the net annual value. You can say it, call it as the net rent. And from this, two deductions are allowed. Standard deduction. Now, this word you will find in multiple places in the entire act. In salaries, you had this. In your other sources, you will find this. So, what is a standard deduction? Standard deduction means where the deduction is fixed, irrespective of your actual expense. So when I'm saying standard deduction, I'm not asking you to go and check your actual expenses. Whether or not there is actual expense, you will have to compulsorily deduct this 30%. Now, this is important when you are solving sums because when we read this format, when we keep this format in mind, we are presuming that any sum on house property will give me all the details. Many times it may not happen so. For house property, you may given only one line. What that one line is saying that during the year, Vishal received rupees 20,000 per month as rent for the shop which he has given on rent. That's it. In entire sum, which is a comprehensive sum covering all heads and everything in income tax, they've given only one line of house property. What? That during the year, Vishal earned rupees 20,000 per month for the shop which he has given on rent. Now, from this one line, I have to start step by step. First, is this my income? Tick. Yes. Second, it will fall under which head? Salary head, house property, business, capital, etc. I found out it is falling in HP head. Tick. Third, once it is falling in HP head, now I have to come to the format first and try to fit in the values. First value is gross annual value. Yes, 20,000 per month into 12 months, 240. Minus municipal tax, nowhere given in the sum, dash. Net annual value, 240. Standard deduction. This is what I have to keep in mind because some will not say that deduct 30%, but this is what I was explaining. Standard means fixed, standard means compulsory. So you have to keep these standard deductions wherever they are given in any head or any provision in mind that this you have to deduct compulsorily. So 30% of this NAV, so 2,40,000 was my NAV, 30% of it comes to 72,000. I will deduct without being said in the question. This is what is standard. So standard means fixed, standard means compulsory. And then is any interest given, whether I have taken any loan for this property and am I paying any interest? If yes, I'll deduct. If nothing, dash HP income is done. So this is how you have to apply the format while you are solving any sum. So many times it happens that in case of your HP head or for any head, they may not give you all the details. But what happens when we are studying that head, we study with all the details. That is where we get stuck up in the exam because in the exam, suddenly you find that this is a HP problem or this is a HP details, but many things are missing and then you are confused. So remember this, you have to follow this format. What is not given, put dash. Naina, you are saying that something has changed. Can you tell me what has changed? Because you are talking about which standard deduction. So if you say that it is changed, let me know you are talking about which standard deduction. Okay. Asta is asking, sir, municipal tax is actually paid by tenant but reimbursed by owner. Okay. See, if you are reimbursing something, it means you have indirectly paid. So then you can deduct it. So for the time being, you have asked the tenant, okay, since the bill has come, you go and pay, and I will reimburse you whenever I come and meet you. That is fine. It means the owner only has paid. That means owner has paid if that is the understanding, right? Understood, students? So gross annual value, what it is, we'll understand in detail. For the time being, it is the rent minus the municipal tax. Two conditions. Firstly, it is on cash basis, so it should be paid during the year. Secondly, it should be paid by the owner, not by the tenant. And then Standard deduction, you have to compulsorily remember whether or not it is, or obviously it will not be said in the sum. You have to do it by yourself. So you have to keep this 30% in mind, that you have to compulsorily deduct 30%. And then you have the interest, which if given in the sum and the interest is related to your loan, which is taken for this property, that will be deducted. Yes, but Ashri, you're right. So interest will also be on accrual. See, as I said, this head is accrual with a pinch of salt. That is exception. The exception is only for municipal tax. Everything else is on accrual, right? So GAV is also, that is rent is also on accrual. Your interest is also on accrual. Asta, it will be done when the tenant pays because the condition is paid. Reimbursing may happen later on because once somebody has paid on my behalf, it is as good as I have paid. So it will be done once it is paid. Sir, why is your standard deduction in percentage? Fine. See, again, Ramchandra, it is again the prerogative of the law to decide. So in some cases where the law feels that I have to link the standard deduction or any deduction with the income, that is more the income, more the deduction, I'll put it in percentage. Like here, why it is in percentage? Because if you observe in this particular format, which I explained at the start, they have not given you all expenses of the house property that you can deduct. So many expenses are not given. And if they are not given, you cannot deduct. That is the rigidity of the format. But you should be allowed some deduction to compensate for those expenses. Hence, they have put it in percentage because generally high valued properties get high rent and generally high valued properties have higher proportion of expense. That is why here they have given it as a percentage. In salary, if you are earning income, there is no expense that you are incurring for earning that salary income. Once you are in job, you are only earning the salary. Still, they have allowed a fixed deduction, again, standard deduction in salary. But over there, the standard deduction has nothing to do with the level of salary. That is just a deduction they have allowed. Okay, okay, Baba, you are going for work. Let me give you some deduction. That's it. So that is why they have kept it as a fixed amount. So there is no particular reason, Ramchandra, but this is what I can understand why in salary it is fixed in amount, but here it is percentage. Fine. Now this is a list of those incomes which are from house property, but which are for the time being exempt. So in section 10, as you all would be knowing, all the exempt income list is given. So from section 10, I have found out those uh, items or those clauses where exemption is given for house property income. So these are those cases where, let us say, your ex-ruler, so all the old-time Raja Maharajas were given one palace as part of the understanding with the government of India. So if they are earning rent for that palace, the HP income of that one palace is exempt. If you're a local authority, your HP income, you're a scientific research association, Khadi village industry institution, etc., etc. So all these people, they are having exemption for house property income. You may not learn this list, not necessary. Now, now we start with the main part. We start with the charging section because the first thing that we have to understand is what incomes will fall under this head. Obviously, by the name we know it is the rental income, but whether all rental incomes will fall, what is house property? Because the rent of house property will only fall under this. So all these questions will be answered by the charging section. Priya is saying income from house property also have different treatments under both tax regimes. We'll discuss everything, Priya. Right now, let us not get into the tax regimes part. We'll discuss everything. Right. Now, this is what the charging section looks like. So the charging section is saying that what is tax under this head? The annual value of property, which is consisting of building or land appertinent thereto, of which assessee is owner, other than such portion of property as he may occupy for the purpose of business carried on by him, profits of which are chargeable to tax under the head, etc., etc. Now, let me put down this in simplified language. So firstly, what is tax under this head is annual value. That is why in the format also the words used was gross annual value. Now we'll understand one by one everything. So the charging section also uses the word annual value. What is annual value? We normally call it as rent. However, the law has been very smart, I will say, not to use the word rent only. Why? See, if the law would have used the word ki what is charged under this head, rental income, the problem would have been if you are earning something which is named something else. Like for rent, you have many other options to use. You can use hire charges, you can use occupancy charges, you can say usage charges. So they did not want to fall in those disputes that whether usage charges will be rent or not, whether occupancy charges will be rent or not. They simply use a generic word, annual value. What is annual value? See, if I'm having a property, let us say a house or a building, it has two types of value. One, it is having a capital value, the value which I will get when I sell it permanently. And second, the value which I will get by giving it temporarily, which you can say on rent, on lease, on hire, for usage, etc. So one is I will get a value by permanently giving it, that is selling it. Two, I will get a value which I will get when I'm giving it temporarily. Now, capital gain head will cover the first value. That is where you are permanently giving it, permanently selling it, permanently transferring it. So one-time value, when you transfer it permanently, will be covered by capital head. But the recurring value, which you will get every year, year on year, whenever you are giving it temporarily, that is what they want to cover under the head house property. And that is why they are saying annual value. Annual means which will come every year. So first reason why they have used the word annual value, so that they can cover the temporary income or the temporary value, I should say, which you can get every year. Secondly, what is very important and interesting to note is when they are saying the word annual value may be the value which you are actually getting, or it also means the value which this property may earn. Please understand. I repeat, when they are using annual value, they want to cover both values. One, which you are actually getting every year, or which you may not be getting, but what the property can earn. So you can say the notional annual value. So the first point, what is the meaning of annual value? That is the value of every year. It is not one-time value. It is not the permanent transfer value, but it is the recurring value. Second, it is the value which either you have actually received, that is the actual rent which you are getting, or the rent which you could have earned had this property been given on rent. So it also covers the notional value. Second, some problem charging. Okay. So that is what is annual value, the value which you can earn year on year. That is why the term uses annual value. For simplicity, we will say rental. So whatever name people may use, higher charges, usage charges, we will call it as rental, which is your annual value. Now, when this annual value would be covered under section 22, that is under this head, so there are broadly three conditions. When all the three conditions are satisfied, only then it can come under this head. Otherwise, it will go to some other head, but not this head. So first is it should be a recurring value. It should be annual value. Also, annual value may be even the actual or the assumed rent. Next, annual value of what? The law says annual value of property. Now here, let me clarify one thing. When you read the heading of this head, the act has used the word house property. And whenever we say house, we get an impression it means the house in which you stay. However, interestingly, the charging section has not used the word house anywhere. It is saying annual value of property, and the property which is consisting of any building. So first important clarification, because whenever I take the name of this head, I say house property, and the immediate impression or the picture which I get in front of my eyes For house property means a residential building. That is not the thing. Read the charging section. It clearly says property consisting of any building. So even if it is a shop, even if it is an office, even if it is a go down, even if it is a house that is residential, any building, any type can be covered subject to other conditions being satisfied. So the annual value, the rental value should be of property. Property may be any building. Fine. Then comes land. Now here again something very important is there. It says land appertinent thereto. Thereto means to the building. Now here they are saying any building. So for building there is no such condition, but for land the condition is the land should be appertinent to the building. What is appertinent? You can say attached. You can say forming part of. So you'll ask me, sir, what it is. So I'll give you an example. You go to any school or you go to any college, you will find that there is a open space, which is generally we call as the play area or the ground, and you have the entire school building, which is surrounded by this ground, or you can see that this entire property is the ground, which is also part of that building. That is, if the whole property is one property, the entire thing is one property. This is where the land is said to be appertinent to the building. That is, it is forming part of the building. So where the property, like in case of many big societies also, the society has buildings plus it has some open space. That open space then can be converted into parking. It can be converted into some open play area or some type of amenities, but that is always the open space. That is again the land which is part of, which is attached to the building. So where a land is part of some building, it is attached to some building, the rental income of such a land is covered. What is not covered? If you only have land, like we call it as the vacant land, no, not part of any building. So you have many spaces like during this Navaratras, the Dandiya programs are organized on these open spaces. Or many times, many of these shows are organized or some exhibitions. All these are organized now. Or now during the summer seasons, you will find circus in many places. They are again on these open lands, which is not appertinent to any building. So the rent of such land where all these activities are being happening and they obviously take the land on rent for that temporary period, the rental value of such open land will not come under the head HP, because here the specific condition is that the rental value should be of which land, which is appertinent, that is part of some building. So any building rental value covered, and land which is part of some building, that land's rental value is covered. So notional value means the amount which can be earned if the property could be used. Yes, Priyanshi. So here, once we proceed with the working, you will find that even where your property is not given on rent, still you may have to pay tax, because that is how the law, at least for the house property head, has been, the calculations, the provisions have been designed that even for a notional value, you may end up paying tax, Priyanshi, right? Yes, Srihari, you're right. Now, the next condition is that in order that this rental income gets taxed under the head HP, you should be owner of that property. Now, what it means, what will it cover and what it will not cover. So let us say Priyanshi is owner of some commercial property. I have taken that commercial property from Priyanshi on rent, and further I have given this commercial property to Rehana on rent. Now I am paying rent to Priyanshi, Rehana is paying rent to me. Now whatever rent I am paying to Priyanshi, for Priyanshi, this is a HP income. But whatever rent Rehana is paying to me, for me, that rent is not HP income, though everything is same. But what is the difference? The difference is this third point. Since I am not the owner of this property, I have already taken this property on rent from somebody else. And again, I have given it on rent, which is called as subletting. So whatever rent I will get from subletting, that is not covered under the head HP, then it can go to either PGBP or other sources. PGBP if it satisfies the condition of business, then PGBP, if not, other sources. So this third condition is again important, where it says anything to be taxed under HP head, the rental should be from that property of which you are owner. If you yourself have taken the property on rent, you are not the owner, it will not be taxed under the head HP. Now, they have interestingly used another word, deemed owner. What is deemed owner? They have defined in section 27, which we are going to see in the next slide. Owner and deemed owner, the difference is in case of owner, the property is in your name, the document is in your name. In case of deemed owner, the property or the document is in somebody else's name, but the law has presumed that you are the owner. What are those cases which the law has presumed? We'll study in section 27. So, three basic conditions. First, we want to tax the recurring value, not the one-time value. Two, the value may be actual or deemed. Three, it should be of any building. It may be residential, commercial, etc. Or it can be of land, but the land should be such that it is attached to a building. Fourth, assessee should be the owner. So only the rent received by the owner will be taxable under the head HP. Now, besides this, there are some more conditions that we have to check and satisfy so that it will get covered under this head, or it may get excluded from this head. So first point, which I have given the heading as exceptions, means this will now not be getting covered under this head, is where you are getting a composite letting in a scenario which is inseparable, and two, property is used by the owner for purpose of carrying on his own business profession, profits of which are chargeable under income tax. Now, these two are exceptions, which means that in these two scenarios, the rental income, even though you have satisfied the three conditions, will not be taxed under the head will not be taxed under the head HP. It will go to some other head. So let us understand what both these pointers mean. First point is composite letting, which is inseparable. Now let us first understand what is this scenario. Firstly, what is a composite letting? Composite letting means where the building and some other asset or facility is given together. It is combined. So let us say I am giving you a furnished flat. I am giving you a furnished office. This is the example of composite letting, where one thing is the building, that is the place, the space which you are giving. Two, along with that building or space, you are giving some facilities, some assets, like it is having all the furniture items, it is having AC, it is having maybe refrigerator, television, etc., etc. That is what is the composite letting. Now, when you are given two things, please understand this head only covers rental income of building or land. It is not covering the rental income of furniture, of other equipments like AC, refrigerator, any such thing. It is not covering. That is why this point has to be addressed separately. Now, what it is saying, if this is a composite letting, whereby both things are given together, which is called as composite, you have to check whether it is separable or it is inseparable. If it is separable, then you will break up the rent of both. Whatever is the rent of building, you will consider it under HP head. Whatever is the rent of the furniture equipment, you will cover it under PGBP or other sources. But if it is inseparable, you cannot separate it, then the entire rent of building also and of all these assets and equipments also will go to either PGBP head or the other sources head, but it will never come under HP head. So the first exception to HP head is composite letting, which is inseparable. So where along with building, any other asset or equipment is given, and it is given as one single inseparable contract. What is inseparable? Let me just give you some insight on this. Inseparable means where the nature of this composite letting is such that you cannot separate the assets, the equipment, which means separate means not physically. It means that without this asset or equipment, I am not ready to take your property. Example, I want to run a theater. Now, when I want to run a theater and I am taking this theater on rent, I will not only require the space, I will require all the amenities, which will include the projector, the screen, the sound system, the chairs, everything. If you're not giving me all these things, I will not take your property on rent. So this is a composite letting, but it is inseparable. Inseparable means I do not want it without these facilities. I compulsorily want the facilities. That is what makes it inseparable. Separable is what, like furnished. You can take it unfurnished, naked also, or you can take it with furniture also. Both possibilities are there. There is no such hard and fast that without furniture it cannot be. People take it without furniture also, and then they bring their own furniture. So that is where it is called as separable. So it depends upon the contract, whether it is separable or inseparable. So if it is separable, you separate both the rents. The rent pertaining to the building portion will come under HP head for follow the format of HP what we are studying. And for the remaining portion of your assets, go to other heads like PGBP or other sources. But if it is inseparable, the entire rent will go to PGBP or other sources. Let me take questions if any. Ramchandra, sir, what if, in your example, if such circus group hires land and a building, that is building instead of tent, and perform and pay rent to the owner of such land and other, after the contract demolish such building, will such income be covered? No, better. See, where the building is temporary, you cannot say the land is part of the building. A land can be said to be appertinent to the building, where the building is permanent structure and land is connected to the building. Like I gave you example, society, common area, or in case of schools and colleges, the ground or the play area which is there. So over there, the buildings are permanent, they are not temporary. And the buildings are also a main part of that entire property, right? Yes, Kevin, you're right. Inseparable can be an auditorium also. So all these examples where you do not want that property without those assets and facilities are inseparable. Fine. Now, what is the second exception? Now, the second exception is interesting. What it says, what will not be covered under the head HP? A property which is used by the owner for running his own business. So let us say I am having an office where I am carrying out my profession of chartered accountancy. This office, the income and expenses coming from this office will not be covered under HP head. But I have one more office. Let us say I have one more commercial property, a shop, an office, which I have given to you on rent. That rent will come under the head HP. So please understand, only that space which I am occupying, I am using for running my own business, that space or property will not be covered under HP. The income expenses of that property will go to PGBP only because I'm running my own business over there. Be clear with this. You have to run your own business. If you are giving it on rent to somebody else and that person is running the business, obviously, if I'm giving a shop on rent or some office space on rent, the person is going to run business. The rent which I'm getting will come under HP head only. But where I am running my own business sitting in that place, like in my office, I sit and perform all my work. That office, the income expense of that will not come under the head. I hope this point is clear. Now there is some interesting amendment. Firstly, there was this case law, and then relating to this case law, in the previous budget, which is applicable to your exams, this amendment was brought in. Now, both these things I'll explain. And when you're reading this, you'll feel that we are talking about the previous point only, but the previous point which I just explained and this point are different. Again, I'll give you example. I have an office space in which I am sitting to perform my profession. That is what is fitting in this point. That is where I'm carrying out my own business, and the income expense relating to that space will not come under the head HP. Perfect. Now, what is this third point? Assessee is engaged in the business of letting out of properties. Please understand what it is. My business is to give properties on rent. So I have taken multiple properties and it is my business to give these properties on rent and earn from that rent. So giving properties on rent is my business. So you have many big companies, real estate companies, whose business is that either they will purchase or they will construct properties in prime locations, and then they will give these properties on rent, which would be their main business. So their business itself is giving properties on rent. Now, I hope you firstly understand the difference between the second and the third point. Second point is where you are sitting in that place and running your business. Your business can be anything. Like my business is CA profession, CA practice. So I'm sitting in this place and running my practice. There, I am fitting in point number two. It is not covered under HP. Third point is where my business is giving properties on rent. So I'm not sitting in that property. I've taken many properties either by construction or purchase, and now I'm giving these properties on rent, and giving on rent is what is my business. In this regard, the present position after all these amendments is you have to check whether the property is commercial or whether it is residential. So where you are in the business of giving properties on rent. So your business is giving the properties on rent. Check whether the property is commercial or residential. If it is commercial, so your business is giving on rent, and what are these properties? These are shops, these are godowns, these are office spaces. It will go to some other head. It will not come under the head of HP. But if your business is giving properties on rent, and what is the property? The property is a residential house. So I have different flats in different areas of different sizes, some 2 BHK, some 3 BHK, with different types of options like with balcony, sea facing, etc., etc. So I'm in the business of giving property on rent, and the property is a residential property. Now the amendment says it will not be taxed under the head PGBP, it will be taxed under the head house property. So now for this part, there are two possibilities. If the properties which I'm giving on rent, and firstly, most important thing, renting is my business, giving on rent is my business, and the property is a commercial property, it will go to the head PGBP because it is my business to give on rent. So it becomes a business income provided the property is a commercial property. But even though it is my business to give property on rent, but if the property is a residential property, it will not go to the business head. Because of this amendment, it will now be taxed under the head house property. So for this type of income, there are two different tax treatments depending upon nature of property. So there are three conditions which have to be satisfied, all the three, and you should not fall in any of these exceptions. After you check all these conditions, you will come to know whether your rental income is under the head house property or it will get covered under some other head. Is this understood by all? Any questions or doubts with the charging section, students? Kevin is saying, sir, if one second. So Kevin is saying, sir, if leasee parts of property like half of the residential and half for commercial, still it won't be a problem and considered under IFHP. See, once you are a leasee, but once you are already a tenant, you are out of house property. Na? For tenant, then it doesn't matter whether it is residential or commercial. Na? Kevin? Anubhav is saying DLF. I did not get what you want to say, Anubhav. Ritika sir, exception point 3 Hindi में बता दीजिए. Okay. Dhanush sir, it is simple that if we provide commercial, it goes to other head. Other head means it will be PGBP, and residential, it will be HP. Dhanush, you're right, but this rule is applicable only when your business is giving the property on rent. Understood, Dhanush? Kevin is saying, but an agent can rent both commercial and residential. So income from renting commercial, PGBP, income from renting residence is house property. No, beta. So if you're talking about agent's income, whether he is giving house property on rent, whether commercial, whether residential, or is giving anything on rent, Let us say I'm agent. You want a tractor on rent. I arrange that tractor for you. You give me commission. You want some shop on rent. I arrange that. You give me commission. So for agent, beta, anything given on rent, the commission which the agent gets is always business income. Now, there is no question of house property because what agent is getting is not rent. Agent is getting commission. Good question, Srihari. Srihari is asking whether there is any criteria property should be situated in India or not. See, for this, you have to first go to another chapter, which is the residential status. In that chapter, you first decide whether that income is taxable in India or not, because we are computing the income tax as per India's income tax law. Now, if your property is situated outside, then you have to check Section 5 of the Income Tax Act, which will help you decide whether you have to pay tax of this foreign property in India. If your answer is yes, as per Section 5, you have to pay the tax in India, then you fall under the Income Tax Act of India. And then all the provisions of Income Tax Act, what we are studying right now, applies. And it makes no difference whether the property is in India or not. But before you start applying all these provisions for computing the income and tax, you have to first check Section 5 of Income Tax Act, which talks about whether that income will be taxed in India or not. So if it is a foreign property, you should first check that. Fine, beta? Diya is saying, sir, in explanation 3 also, if we are in the business of letting out and we are giving residential flats, then it will be taxed under PGBP. No, beta. That is what is now amendment. Priya, मैं हिंदी में बोल रहा हूँ. अगर आपका बिजनेस प्रॉपर्टी भाड़े पे देना है, कोई भी जगह भाड़े पे देना, ये आपका बिजनेस है, तो हम पॉइंट 3 वाले एक्सेप्शन पे आते हैं. और फिर पॉइंट 3 बोलता है कि अब आप देखिए कि आपका प्रॉपर्टी रेसिडेंशियल है या कमर्शियल. अगर भाड़े पे देना जो आपका बिजनेस है और जो चीज आप भाड़े पे दे रहे हो वो कमर्शियल प्रॉपर्टी है, तो द हेड इन विच इट इज कवर्ड इज पीजीबीपी. भाड़े पे देना ये आपका बिजनेस है और जो प्रॉपर्टी आप भाड़े पे दे रहे हो वो रेसिडेंशियल है, तो द हेड विच इज एप्लीकेबल इज एचपी. फाइन बेटा. Ishan, sir, if the person is in letting out of residential property, then it is HP. Okay. Ishan, I will again repeat. When you are giving a property on rent, firstly check whether giving it on rent is your business. Understand this. See, I am a salaried person, for example, and out of my savings, I have purchased one extra property which I am giving it to you on rent. Now, whether giving this property to you on rent is business, answer is no. See, what is a business? Where I have a setup whereby I will have multiple properties. I will keep on purchasing the properties in prime areas. I will keep on looking out at customers. Now I will also have my app whereby I can get good customers for giving on rent. That is what is a business. Just having one or two properties extra which you are giving on rent because they are idle is not business. So first check whether you are in the business of giving properties on rent. So simply giving property on rent is not business. If you are simply giving property on rent because you have extra properties and you are simply giving it on rent, simply giving means आप वो बिजनेस नहीं कर रहे भाई, आपके पास पड़ा है, किसी ने मांगा, आपने दे दिया. आपने सिर्फ वहां पे बाहर बोर्ड लटका के रखा था फॉर रेंट, कोई आया आपने दे दिया. दैट इज व्हाट इज सिंपली गिविंग ऑन रेंट. फिर वो रेसिडेंशियल हो या वो कमर्शियल हो, वो हमेशा एचपी हेड में आता है. बट जहां पे आप एक बिजनेस, जैसे आप कोई भी दूसरा बिजनेस रन कर रहे हो, वैसे आपका एक बिजनेस ही है प्रॉपर्टीज का, जहां पे आप प्रॉपर्टीज को भाड़े पे देते हो, यही आपका बिजनेस है. तो फिर अगर वो रेसिडेंशियल प्रॉपर्टी भाड़े पे देने आपका बिजनेस है, वो एचपी हेड में आएगा उसका रेंट. और कमर्शियल प्रॉपर्टीज भाड़े पे देना बिजनेस है, तो उसका रेंट पीजीबीपी हेड में जाएगा. फाइन. तनु इज आस्किंग, सर, इफ वी गिव एचपी ऑन रेंट फॉर 1 or 2 months. बेटा वो अभी वो स्पेशल केसेस पे आते हैं. 1 or 2 months रेंट पे दिया तो क्या होगा, आधा प्रॉपर्टी रेंट पे दिया तो क्या होगा, दोज आर स्पेशल केसेस. सर, राजवीर इज सेइंग इफ प्रॉपर्टी इज आउटसाइड इंडिया देन यस राजवीर, यू आर राइट. सो जब प्रॉपर्टी इंडिया के बाहर है तो आप सेक्शन 5 से डिसाइड करोगे कि आपको टैक्स भरना है क्या. तो उस केस में अगर आप आरओआर हो तो आपको टैक्स भरना है. सेकेंडली, आप आरओआर नहीं हो पर वो प्रॉपर्टी का रेंट इंडिया में रिसीव हो रहा है तो भी आपको टैक्स भरना है. दिस इज व्हाट सेक्शन 5 सेज. सौम्या, सर, व्हाट इफ अ सिंगल प्रॉपर्टी इज लेट आउट पार्टली. सौम्या, ये केस अभी बाद में रखते हैं. पार्टली लेट आउट, पार्टली, ये वो थोड़ा बाद में करते हैं. Sir, what if part of my house given for letting out, not fully? Srihari, will come to this. Part of house given on rent, like paying guest. We'll come to all these special cases in the next lecture. Dhanush, it is not PGDT, it is PGBP. where you have read PGDT? धनुष, PGDT आपने कहाँ पढ़ा है बेटा? Priyanshi, sir, means the assets which are inseparable are taken in consideration. Yes beta, correct. So asset should be inseparable. Okay. Shailja, sir, business of letting out one property is a residential house is under HP. See, if the business is letting out, Shailja, and the property which you are letting out is a residential property, it will go to HP. If the property which you are letting out is commercial, it will go to PGBP. Fine. Shailja, I hope you have understood my question, my answer, and hope your query is satisfied. Good. So students, let us take a break. बहुत ज़्यादा concept हो गया, बहुत ज़्यादा technical चीजें हो गई. So let us take a break, and after the break, we'll come back, and then we'll start some practical part. So around 10 minutes break, we are breaking for. So my watch is saying 7:32. So exact at 7:42, we start. Fine. So break for 10 minutes. Okay. What if I'm not owner in this year? So in this year, if you're not owner, if you are earning rent, it will not be taxed under the head HP. Owner carry out own business on ground floor plus floor given on rent. See, all these are special cases, but you will treat it separately. So all those who have answered asked such questions, part house is residential, part commercial, part-time residing, part-time giving on rent, or in your example, part is for own business, part is given on rent. So you'll apply both the provisions part-wise. So then you will assume there are two HPs and you'll apply the provisions for each part separately. Somebody saying if I'm a say a spare property and I'm giving it out on a rent, will it come under house property? Yes. So if you're having spare property, giving it on rent, whether it is commercial, residential, it is not a business of giving on rent, it will be covered under the head house property. Sir, in page 3.137 point, assessee must be owner of the property. Correct. The requirement of registration of sale deed is not warranted. See, what it means is that it is not necessary that the sale deed that you have prepared should be registered. So registration of sale deed is not the proof that you are owner or not. This is what it means. So in short, Rehana, it means that even if you have not registered the document, so far as there is a document, we will assume that you are owner. That is what it means. Sir, what if building has inseparable assets or if fully furnished, but that property is used for residential purpose? See, again, Priyanshi will go by the agreement where the requirement of the agreement is such that I am not ready to take your property without the assets. It will be inseparable and then it will not come under the head HP. Generally, furnished flats are not covered in inseparable because flats are also available with and without furniture. It is just for convenience that you are taking it furnished. Generally, I'm again using this word because in taxation, many times you have to go in detail of the actual agreement. But in your case, generally residential flats which are furnished should be classified as separable and the rent relating to the flat will come in HP head only. Fine, beta? Now, we come to the concept of deemed owner because HP head is applicable only when either you are owner or deemed owner. Now, owner we all know that is where the document is in your name. Now, what is deemed owner? Where the property is in somebody else's name, but still the law assumes that you are owner. Now, what are those cases? They are given in section 27, where the law assumes that you are owner. First case, you have given your property by way of gift to your spouse or to your minor child. If you are giving your property to your spouse or to your minor child without proper consideration, which we can say as gift, then even though today the property is in their name, the law will deem that you are the owner. It means you will be liable to tax. So what is the impact of deemed owner? That even though the property is in somebody else's name, you are deemed owner, so you have to pay tax on the income. So here I have given the property to my spouse or to my minor child, and it is given without appropriate consideration, that it is given like a gift. In that particular case, I am deemed to be owner, and whatever is the income, I have to pay the tax. Here, there are two exceptions to this point. First, in case of spouse, where I have given the property to my spouse because of an agreement to live apart, that is because of a divorce. Many times you know that during divorce, as an alimony, you have to give one house to the spouse, especially to females. In such a case, the property which you have given to the female, obviously it is free, it is not by charging any consideration. In fact, that is what is the court has given the order. So you have to give it compulsorily. In that particular case, that will not be covered over here. You will not be required to pay tax. Then the spouse will pay tax on the income, whatever they are getting. Similarly, for minor child, there is an exception. If the minor child is a married daughter. Now, see, today this is not possible. We are talking about 1961 Act. At that time, many things were happening in India. Today, this is not legally possible, but since we are continuing the old law, and also there is a possibility that in some remote places, this may have actually happened. It may be illegal under some other law, but it may have happened. So we have to go by the practicality. So if you have gifted your property to a minor child who is now married daughter, In that case, you will not be deemed owner. Whatever is the rental income will be taxed to that minor child only. It will not be, you will not be deemed to be an owner and you don't have to pay the tax. Now coming to the second point, holder of impartible estate. Now what is impartible estate? The best example is our day-to-day life example. So let us say the house today in which you are staying in was originally purchased or constructed by your great grandfather or by your grandfather, and now by way of devolution, automatically it has come to you. Now, many times in such cases where some inherited property is received, you will find that, at least in India, we are not so cautious that we will get the agreements made in our name, because we are very, you can say, casual in this regard, that we presume that, okay, fine, since it is belonging to my grandfather, then my father, now it is me. So automatically I am the owner. That may be correct, but we never get the proper documentation done in our name. In such a case, the property is still appearing in the name of your ancestors, but today you are holding that property. This is what is holder of impartible estate. Why it is called as impartible? Because there is no proper partition done. It is still appearing in the name of ancestor. Tomorrow, any other legal heir may come and demand it. So that is where it is called as impartible estate. Now, if you are occupying such impartible estate where nobody else is claiming that property, the law says we will deem your owner even though the property is not properly in your name or there is no document stating that the property is yours. But since you are holding it and it is an impartible estate that is still belonging to your ancestors, we will deem that you are the owner. Third, the third case scenario is what? You have purchased a flat. Now, in many places, the building or your society is a cooperative housing society. So you would see that nowadays, in many of these big societies, they register themselves as a housing society. Now, interestingly, in a housing society, all the flats are legally in the name of the housing society. This is interesting. Even though you have paid for the flat, even though you have purchased the flat, legally the society is owner. Now, the law says that even though as per the society laws, the society is the owner, but you are deemed owner. Why? Because ultimately you have paid for it and you are occupying the flat. Nobody else can claim the flat from you. So ultimately it belongs to you, but legally the society is the owner. That is why this has been put in deemed owner, that the law will presume that you are the owner. The fourth scenario is, many times you purchase property or you, I will say, book a property in some under construction project. Now, when you book a property in some under construction project, the law says that until and unless the project is completed, the builder cannot legally transfer the property to you. So where a property is under an under construction project, you cannot become the legal owner. But if you have paid the consideration and if the builder has given you the possession, even though the remaining building is still under construction, it may get completed in 2 years, 5 years, 10 years, but the builder has given you possession, you have paid the consideration, then as per section 53A of the Transfer of Properties Act, you are deemed owner of that property. It will be deemed that the builder has actually sold the property to you. So this is the fourth scenario of deemed ownership. And the fifth scenario is where you have taken the property under lease and it is a long-term lease. Now, what is a long-term lease? The long-term lease is defined as the lease period of 12 years or more. So where you have acquired the property by way of lease and the lease period is 12 years or more, such a scenario is also covered under deemed owner. So if you are a tenant over here, but under a lease agreement beyond 12 years, we will deem that you are owner. So these are the 5 case scenarios where you are not the legal owner. The property is not legally under your name, but the law says we will presume that you are the owner. And once the law presumes you are the owner, the income from such property will get taxed to you, even though it is not in your name. That is the importance of this point of deemed owner. No, Priyanshi, the secretary of the society is never deemed owner. You are the deemed owner. Please understand this. This section is making you the deemed owner because in substance, you are the owner only. The problem is, as per the Societies Act and the bylaws made there, the properties are standing in the name of the society. See, the secretary and all are only the caretaker or custodian. They can never become the owner, right? So what if there are more than one holder in the estate, like one property is held by one person and another is held by someone else? So that is where, Ishan, the point is, see, let us say it is a huge estate and internally you all brothers have decided that this bungalow will be kept by you, this particular flat will be kept by someone else. So that is where again they are saying once you are holding, that is why they have used the word holder of impartible estate. So what is holder of impartible estate? Again, I'll repeat, Sri Hari, there is some inherited property for which the partition is not done. What is partition? Nobody has written and said that this will belong to you, this will belong to you, this will belong to you, this will belong to me. That is not written. That is what is impartible. And holder means today you are occupying that property. Today that property is under your control. You are using it. That is what is holder of impartible estate. So generally it happens for all inherited property. It may be the case even in case of your own house, because there is a possibility that your house may have been originally purchased by your grandfather, great grandfather, and now by way of devolution, it has come to you or to your parents. Though they have not purchased it, the property documents are not in their name, but ultimately they are the owner because they are the legal heirs of your ancestors. But since there is no document standing in their name, even today the document is in the name of your grandfather or great grandfather. That is why it is called as an impartible estate, right? See, either they should have made a will, or there should have been a gift deed, or there should have been a partition deed by which the property has been transferred to you. Then the matter is different. Then it is not called as impartible, it is already partitioned. But where there is no partition, the property standing in the name of ancestor, it is called as impartible estate. And you are occupying it, so you are called as holder and you are deemed owner. Fine. Dhanush, point 5 is you have taken property on lease. The lease period is more than 12 years. You will become deemed owner in the eyes of income tax. Though you are a leasee over there, but where the lease is extending 12 years, the law says that for lease extending beyond 12 years, we will assume that you are the owner. So deemed owner is lease period extending 12 years. Fine. Now, we start with the practical part. We have to compute total HP income, in which the format first is GAV minus municipal tax. You get NAV minus standard deduction minus interest. Now, out of these 5 components, working is required only for component 1, that is GAV, and in cases interest. Once you make these two workings, then the computation of total HP income is a simple format. Tanu, your question is interesting. Tanu is saying, sir, if the property is occupied by me, how we can earn income from that? That is where the concept of deemed income comes in. And I have explained this. When they have used the word annual value, it means both the actual income and also the deemed income. So it may happen that you are occupying the property for your own use. So you're not giving it on rent, but still it has a deemed value. Now you'll realize that point here. So now we are going to the computation. The first computation is GAV. Now I'll repeat, GAV is nothing but actual rent or the notional rent. This is the rent which you are getting. This is the rent which is the value of the property had you given it on rent. So this is where the calculation becomes interesting. They are saying that we do not only see the actual rent, we will also see the notional rent. Now this is over here called as actual rent. This is called as expected rent. So these are the terminologies used in the law. Now we'll understand how GAV is to be computed as per section 23. So 22 was charging section, 27 gave the definition of deemed owner. Now we are on the computation section, which is 23, 24, 25. All these are computation sections. In this 23 helps you determine, 23 bracket 1 helps you determine how to find out the GAV where the property is given on rent, that is the property is let out. So even these terms are important. One is let out, one is self-occupied. So when I'm giving the property to others on rent, it is called as let out. Where I'm keeping the property for myself, for my own use, it is called as self-occupied. So 73, sorry, not 73, 23 bracket 1 deals with those case scenario where the property is given on rent, that is, it is let out. Now the law says when the property is let out, how to find out GAV? It says that find out both these figures first. One is actual rent, one is expected rent. Now how to find out expected rent? The law says first find out MR. MR is municipal rent. Compare this MR with FR. FR is fair rent. Now what is MR? What is FR? Every property, there is a rent or there is a value fixed by the municipality. So for every property, the municipality of your area has fixed a value. So according to municipality, whatever rent your property can earn is called as municipal rent, or it is also called as municipal value. So the value or the rent fixed by municipality for your property is called as the municipal rent. So first take this figure. This you get from the municipality. Second is find out the fair rent. What is fair rent? Similar flats or similar shops or similar office, how much rent they are getting. So normally, let us say you are staying in some building or society. You want to find out fair rent, simply go and check in the same society, same type of flats, what you are having. What is the rent they are getting? That is what is fair rent. Now, I want to find out my expected rent. How to find out expected rent? Compare both these rents. And out of both these figures, take whichever is higher. So let me give you an example. This is 2,40,000. This is 3 lakhs. So obviously, what will be my expected rent? The law says it is higher of the two, so it is 3 lakhs. So how to find out expected rent? Find out municipal rent, find out fair rent, compare both of them, take whichever is higher. That becomes your expected rent. But this is not the end. Now this 3 lakhs, which you have found out in step 1, take this 3 lakhs and compare it with the third figure, which is standard rent. Now, what is standard rent? There is a special act in India called as the Rent Control Act. Today, it is applicable to very few parts. Wherever this act is applicable, this act has kept a maximum limit on the rent. This maximum limit, which is fixed by this act, is called as standard rent. Now, there is a possibility in the question that standard rent is not given at all. Why? Because the Rent Control Act is not applicable to your city. And today, in majority places, this is not applicable. So standard rent is now very rare. So if standard rent is not given, this is your expected rent, that's it. But if let us say in your locality, standard rent is given because Rent Control Act is applicable, then find out standard rent. The standard rent comes to 270. 2,70,000. Now, what is your final answer? Your expected rent would be lower of the first rent which you have calculated, which is higher of municipal rent and fair rent, and compare it with standard rent, whichever is lower. So your answer will be 2,70,000. Right? Is this clear to all? What if this was 330? Sorry. What if this was 330? In that case, the rule is you have to take whichever is lower, then our answer would have been 3 lakhs. So had this been 330 in the sum, The answer would have been 3 lakhs. I hope this is understood by all. Any questions or doubts, students? Tanu has a question. Sir, if house property is occupied by me, then how can we earn income from that? So that is what is the point, beta. You will not earn income from a self-occupied property. So if you're occupying the property, then it is called as self-occupied. So it means there is no actual rent. But still there is an expected rent, na? Because expected rent is what municipal value it is there. Fair rent means the rent which similar houses in your same society get. So these are there. So you will get some expected rent. So expected rent is there for all properties. Actual rent is not there for self-occupied, I agree. So there is always expected income for every property. So the first is you find out this expected rent. So what is the formula or what is the mechanism? First compare municipal rent, fair rent, take whichever is higher. This higher value, compare this higher value with standard rent, take whichever is lower. If standard rent is not given in the sum because the Rent Control Act is not applicable, then automatically this figure that you have calculated at the start becomes your expected rent. Now, all this was working of expected rent. Now, to find out GAV, we have to find out actual rent. Now, what is actual rent? Actual rent, as the name suggests, is the rent which you are supposed to get because you have given the property on rent. So it is really your actual rent. Now, how to find out this actual rent? They say that first take the annual rent. Now, since we are following the accrual method, it may be actually received or it may be due. It makes no difference. So let us say you have decided that 30,000 per month is the rent of your flat or your shop or your office. So 30,000 multiplied by 12 months. So 3,60,000 becomes your annual rent. Now, from this annual rent, deduct two things, unrealized rent and vacancy rent. Now, what is unrealized rent? In simple words, it is your bad debts. Now, this unrealized rent will happen only in the year in which your tenant has left the property, the tenant is not traceable, and the tenant has not given you the balance amount. So there is some bad debts which now you will not be able to recover because the tenant has left the property, the tenant has fled, the tenant, whatever deposit the tenant had kept, that deposit is also all exhausted, and still some rent is pending. So such a case is unrealized rent, which we also call as bad debts. So this unrealized rent will be deductible. Let us say it is 60. Now what is vacancy? Vacancy rent will happen in that scenario where, pay attention, it will happen in that scenario where your property was idle for a few months. So let us say I want to give my property on rent. I have fixed the rent as 30,000. But now in the month of April, there is no tenant. Again in the month of May, there is no tenant. So I want to give my property on rent, but I am not getting a tenant. Now let us say my property is given on rent from 15th of May. So entire April and half of May, my property was vacant. So the rent pertaining to this vacancy period, which is 1.5 months, will be called as vacancy rent. Now, since my monthly rent is 30,000, so 1.5 month rent becomes 45,000. So that is what is vacancy rent. So my rent fixed is 30,000 per month. So 12 months rent is 360. From this you deduct if there is bad debt. This will happen only in the year when the tenant has left the property and the tenant is no more traceable. That is where it will be called as bad debts. And then vacancy rent is the rent where your property was idle, was vacant because you did not get a tenant. So rent for that period is vacancy. Now, when I subtract all this, the balance which I'm getting here after subtracting 255, this will be called as my actual rent, that is AR. So let us understand how to calculate GAV for calculating GAV, you have to first calculate two things. One is expected rent, one is actual rent, right? Priyanshi is saying, sir, but if actual rent is not there, then why we calculate such rent and why the value of building is not considered in PGBP and pay tax as per PGBP? But Priyanshi, how can there be PGBP? Are you in business? See, if there is no actual rent, why the actual rent is not there? Because you are staying in your own house. If you are staying in your own house, how it will go to PGBP? What is the question or what is the point of getting into PGBP? I did not get your point. So getting into PGBP, I don't think is possible in this particular case. Anubhav beta, vacancy rent, how did I calculate? I said that my property was vacant for 1.5 months, entire April and half of May because I got tenant from 15th May onwards. So 1.5 months my property was vacant. In this particular case where my property is vacant, what is my rent which I have decided for 1 month? It is 30,000. So for 1.5 months, the rent comes to 45,000. That is how I calculated vacancy rent of 45,000. Priyanshi, but I am still not able to get your point. My point is, if you are staying in your own house, what is the question of considering it in PGBP or capital gain? Why you are saying that it will get covered in PGP or capital gain? I did not get this point. Yes, Srihari, you are right. So now students, I have two case scenarios. One where my expected rent is 370. Two where my expected rent is 330. Now for both these case scenarios, sorry, not 330, my expected rent is 270 or my expected rent is 300. So I have two case scenario 1, case scenario 2. Now for both these case scenarios, we'll try to understand how to find out GAV. Now in both these case scenario, my actual rent is 255 because the details of actual rent is same. It is 360 annual rent on the basis of 30,000 per month. 60,000 is bad debts. And I could not get a tenant in the first 1.5 months. So my vacancy is 45. Now in this scenario, how to find out GAV? Now for finding out GAV, the steps are first find out ER, AR. Step one, scenario 1, scenario 2. In scenario 1, my ER was 270. How it was 270? 240 compared with 300, whichever is higher is 300. Compared with my standard rent, which is 270, whichever is lower. So 300 or 270, whichever is lower. So it comes to 270. So first case scenario, my expected rent is 270. Second case scenario, 240 compared with 300, whichever is higher is 300. Now I change the example. In this second case scenario, I said that my standard rent is 330. Now, whichever is lower, 300, 330, that will be my expected rent. So here in this case scenario, my expected rent is 300. How do I find out my actual rent? It is annual rent minus bad debts, that is unrealized rent, minus vacancy period rent, that is vacancy rent. So it is 255. Now, how to find out GAV? What does section 23 bracket 1 says? 23 bracket 1 says GAV is higher of expected rent and actual rent. So firstly, it says take whichever is higher. Now in first case scenario, 270, 255. What is higher is 270. So I should directly take GAV as ER, but the answer is no. There is a condition. What is the condition? Wherever your ER is higher, don't directly take GAV as ER. Find out another value which is ARV. What is ARV? ARV is take AR which is 255, and add back the vacancy rent. What was vacancy rent? 45. Now the value which you are getting by adding back this is called as ARV. How much is this value? It is 300. Correct? I hope everybody is getting this. So you compare ER and AR. If ER is greater, like here, ER is 270, don't directly take GAV as ER because there is some specific rule given over here. I'm trying to explain that rule. So wherever ER is greater, find out one more value called as ARV. How to find out ARV? Take your AR, which is 255, and add in this the vacancy portion. How much is the vacancy portion? It is 45. So adding up this makes it 300. Now compare ER with ARV. Now if your ARV is now greater than ER, as you can see in my example, ARV is greater. Now my GAV will be AR, that is 255. So understand one thing, ARV is a figure which you have calculated only for comparison. ARV will never become your GAV. Your GAV will be either ER or AR. But wherever ER is greater, you will not directly take ER. You will find out one more value which is ARV. Compare ER with ARV. If ARV is greater, then the GAV will be the AR only. So in this case, GAV will be AR because my ARV, this figure which I computed, is greater than ER. So I will take AR as my GAV. Students, I hope this is clear. I'll take few more case scenarios to make you understand this. Let us say in the third case scenario, my ER comes to 320. I'll explain case 2 scenario later. Let me first take another case scenario where my ER is 320. Again, AR is 255. Again, ER is greater. What you will do? You will add the vacancy. How much it becomes? 300. Now compare ER with ARV. Now here what is happening? Despite of adding vacancy, this ARV is still smaller than ER. Now in this case, your answer is ER. So in short, where ER is greater than AR and ARV, then ER is the GAV. Where ER is greater than AR, but if you find out ARV, ER is not greater than ARV. In that particular case, AR is your GAV. ARV will never become GAV because ARV is only a figure for comparison. So wherever ER is greater than ARV also, ER becomes the GAV. Wherever ARV is greater, you will take AR as the GAV. I hope this is understood by all. Another simple case scenario will be, put down the values on this side. Let us say my ER is 250 and my AR is 255. Now in this case scenario, this is case scenario 4. ER is 250, AR is 255. Now already my AR is greater than my ER. Don't waste time in finding out ARV because already your AR is greater. So your GAV will be AR. So where AR is greater than ERV, GAV is AR. Where ER is greater, find out one more figure, that is ARV. Compare ARV with ER. If ARV is greater, take AR as the GAV. If still ER is greater, take ER as the GAV. This is what is the working, or this is the calculation provided for computing GAV. Look at this patiently. Initially, you may feel it not appropriate, it may not match your understanding. It is fine. These things happen in taxation. Now, Priyanshi is having a very interesting question. Rather, it is a question which is giving her a lot of pain. She is saying that if I am not receiving any rent, why should I pay tax on such a thing which I am not receiving? Priyanshi, I can understand your pain, but please understand one thing. I mentioned at the starting part of this topic that in this topic, they are not only going to tax your actual rent, they also want to check your notional rent, and there is a possibility that they will tax your notional rent. So this head, the special point of this head is that even notional, even the deemed income, even the deemed rent is taxed in this chapter. And that is why even in a property which is occupied by you, you may end up paying tax. I am not saying every time you will pay tax. We are still yet to go to section 23 bracket 2, which deals with self-occupied properties. But what we have understood is for every property, there will be two values, AR and ER. AR will be there only when the property is let out. So for a self-occupied property, there will be no AR, but still ER will be there always because ER is the expected rent. Dhanush beta, what is your question? I'm not able to understand your question. AR means actual rent, which is calculated by taking annual rent minus unrealized rent minus vacancy rent. This difference is called as AR. And how do you find out GAV? Compare the ER with the AR. If AR is greater than ER, like in case 4, AR is greater than ER, directly AR is your answer. But if ER is greater, like in case 1, then you find out another value which is ARV. Now compare it again with ER. If now ARV is greater than ER, then AR becomes your answer. If ER is greater than ARV also, that is ER is greater than ARV, you will take ER as the GAV. So in short, either AR or either ER, only one of these two will be GAV depending upon who is greater. Tanu beta, if AR is lower, first find out ARV. Compare the ARV with AR. Compare the ARV with ER. If your ER is still greater than ARV, then only ER becomes GAV. Soumya beta, the note which is mentioned below, this is what I am trying to explain with these examples. Because the language of law is slightly tricky. I will explain the language also, but let us first understand it with practical case scenarios because understanding the theory with practical is more easy. Sorry. So I'm first going by the practical. Then I will come to the language also, Soumya. Fine. Now Ishan is saying, sir, what will happen if both ER and AR are same? See, if ER and AR both are same, then you can take anyone as your GAV. Obviously, you will say AR is my GAV. Priyanshi, greater of ER and AR will be GAV. नहीं beta, Priyanshi. ARV you will compare with ER, this is correct. But if your ARV is greater than ER, the GAV will never be ARV. ARV is only a figure for comparison. It can never become GAV. So if your ARV is greater, then the GAV will be always AR. Anubhav is saying, sir, are we going to study the scenarios where even if we are self-occupying, we are paying tax? Yes, beta. We are going to study the scenarios. Our next session is for studying all different scenarios only. Over there, you will get a scenario where even for self-occupying, you are paying tax. Mandruti is saying we will get GAV before deducting vacancy loss. Is it correct? No, beta. It is not correct. Shri Hari, ARV is equal to AR plus vacancy rent. Yes, that is what I'm saying. ARV is AR plus the vacancy rent. That is ARV. You can say the full form. See, ARV is nowhere given in the law. All these terms I'm using for your understanding. So ARV is the actual rent, including or adding the vacancy rent. That is what is ARV. Ishan beta, that is why purposefully I have not yet answered the second case scenario. Wait for that. First understand 1, 3, and 4, which are straightforward case scenario. Naina is asking, will these slides be available? Yes, but I've already uploaded it today in the evening before the start of our session. Maybe by tomorrow maximum, you'll get these slides. So understand this, students. I will repeat. So the steps are calculate ER, calculate ER, calculate AR, right? ER now you know, compare these two, whichever is higher, compare with standard rent, whichever is lower. That is ER. Then find out AR. AR is by taking annual rent, from that subtracting unrealized rent and subtracting vacancy rent. The balance is your AR. Now compare your ER and AR. So once you find out both these values, ER and AR, compare them. If AR is higher than ER, simply your GAV will be AR. If AR is greater than ER, the GAV will be AR. But if ER is greater than AR, now please understand, the law does not want to tax ER because ER is not the real income. This is the basic idea. So the law does not want to tax ER. Why? Because ER is a notional income. It is an assumed figure. It is not your real income. So that is why the law says, okay, even if ER is greater than AR, I do not want to tax ER. Do one thing, find out a new figure, which is ARV. How to find out ARV? Actual rent plus vacancy rent. The total of actual rent plus vacancy rent is ARV. So find out ARV, which is actual rent plus vacancy rent. Now compare this figure with ER. What is the two possibility? ER and ARV. When you compare, you find ARV is greater now. If ARV is greater, your answer will be again AR. Because understand one thing, ARV is only a comparison figure. Second possibility, ER is greater than ARV also. Now, if ER is still greater, now the law says, now I cannot do anything. ER is very high, then AR also, ARV also. So finally, I have no choice but to take ER. So remember one thing, only AR or ER. One of these two things can only be your GAV, nothing else. But if there is no vacancy, then there is no question of ARV. Yes, Sri Hari. Yes, Anubhav. Great, great. चलो, तो थोड़ा सा लॉजिक से समझो. The act also does not want you to pay tax on ER. Please understand this. Act is also wanting that you pay tax on AR only. But if ER is still very high, then the act will say, I cannot do anything, pay tax on ER. So I have made some 9 case scenarios in which you have to find out the GAV. I know everything may not be 100% crystal clear till now. Still, I will give you time. Start finding out the answers for each case scenario. First, find out ER and AR. Then compare both these and find out GAV. Yes, wherever required, find out ARV also. How you find out ARV? AR plus VR is the ARV. So wherever required, find out ARV also. Chalo. I give you 5 minutes. Whatever you can solve in 5 minutes, that will be discussed. Remaining you can do as homework. I will request everyone to take a screenshot of this. So even if by chance you are not having the PPT for some reason, from the screenshot, you should be able to solve. Chalo, 5 minutes. Start solving the case scenarios, whatever you have understood. Priyanshi, perfect. I'm putting your conclusion in the chat for everyone. So here I'm giving you the final, you can say answer for GAV. This I'm copy pasting from what Priyanshi has put in the chat. I don't know why I'm not able to copy paste for some reason. Why am I not able to copy your content and put it here? Not allowed to copy. Sorry, Priyanshi. You should have allowed to copy. Zoom is not allowing. I don't know why. So start computing the values, start finding answers in different case scenarios in front of you. Good. Anubhav, Julie, go ahead. Chalo, I'll start solving for the benefit of all. So see, municipal rent, fair rent, whichever is higher, it is 8 lakhs. Compared with standard rent, whichever is lower. So my expected rent becomes 7 lakhs in the first scenario. Annual rent 900 minus 40 minus 80. So this becomes 780. I compare both this. My actual rent is higher. So no problem. GAV is actual rent. Right? Second case scenario. Again 600, 800. What is higher is 800. Comparing it with 700, whichever is lower. So again, my expected rent is 700. Now, annual rent is 800 minus unrealized this minus vacancy 50. So now this amount is 600. Now, when I compare both this expected rent and actual rent is lower. So I will find out ARV. How to find out ARV? Take this actual rent and add back vacancy. How much is vacancy? Vacancy is 50. So how much is my ARV? ARV is 650. Again, I compare ER with ARV. Now, when I compare ER with ARV, my ER is still higher. It is even more than the ARV. Now, the law says, sorry, I cannot do anything. There is no option but to take ER as the GAV. Students, I hope you have understood this. Ritika, second answer is wrong. I hope you have understood now what is the correct answer for second. Third case scenario. I hope everybody has understood up to second. 800, 600. So it is 800, whichever is higher, compared with 900. So now my expected rent is 800. 900 minus 150 minus 50 is 700. My actual rent is less. So I will find out ARV, which is 700 plus 50. Now I compare this 750 with ER. ER is still higher. So now my GAV will be 800. Good. Many of y'all are now getting the correct answers. That is where why you are having full values in thousands unnecessarily. You can take the shorter values. Nisha Kumari, what is 1100 bit? I did not get. From where have you got 1100? You are talking about which case? I don't know. Chalo. Acha, I think you are talking about the fourth case. Fine. So 800, 900, whichever is higher, 900. Now no standard rent. So 900 is your expected rent. 1100 minus 50 minus 220. So how much it will be? It will be 930. Correct? Sorry, I think it will be 830. Now, again, I'll find out ARV, which is 830 plus 220. So my ARV is 1050. Now, again, I compare it with ER. Now my ARV is greater. If ARV is greater, then the GAV will be only AR, and the AR was 830. So the answer for fourth scenario is 830. Super. Many of you all have got the correct answers. That is great. Mr. M.A. I don't know what is your complete name. Your fourth answer is wrong, beta. I hope now you have understood. Because 1050 which you have taken is ARV, and ARV never becomes GAV. If ARV is higher, beta, always the GAV is the AR only. It is never the ARV. So Mr. M.A., I hope you have understood. Good. Next. Higher of this two is 900. Comparing both these two is 900. Compare with 900. So obviously 900 is your ER. Now 1100 minus 225. So this becomes 875. 875 plus 225. This again becomes 1100. Comparing ER with ARV, ARV is higher. So my answer is AR 875. Superb. Yeah. Many of you all are getting perfect answers. That's excellent. Now, next. 600 plus 800, 800 compared with 900, whichever is lower. So 800, 1100 minus 225 is 875. Correct? Now 875 compared with 800. Already my AR is higher. So my answer is AR. Correct? Next, 1000 plus 800 is 1000. 1000 compared with 900 is 900. Now 1000 minus this is 900. Now if my AR and ER are same, obviously my preference is always AR. So my GAV is AR. Good. Very good. Wow. So now you are getting the grip of this. Excellent. So 1000 plus 800, 1000 not applicable, 1000, 1100 minus 100 minus this, so it is 975. 975 plus 25 is 1000. Now, ER and ARV are same, right? So I'll select ARV. And if I'm selecting ARV, my GAV will be AR. So my answer is 975. See, ER is your last option. ER is selected only in one case where ER is higher. Until unless ER is higher, you will never select ER as your GAV. If ER and ARV are same, you will still select ARV. And when I say you will select ARV, it means finally your answer will be AR because ARV never becomes the answer. I hope this is clear. Last case scenario, 900,000. So it is 1000. 1000 not applicable. So it is 1000. 1100 minus 25 minus 100. It is 975. Now 975 plus 100. It is 1075. Comparing ARV with ER. Now ARV is higher. So my answer is AR. Fine, students. Great. Superb. So now majority of y'all are getting the perfect answers. It means y'all have understood the entire concept thoroughly. That's great. So with this, we have completed the first working part, which is GAV. Now, in the next lecture, we'll go to the next working part, which is of interest, and we'll go to different case scenarios of finding out your HP income. Is this fine? Any questions, students? I hope everything is perfectly fine with everyone. Everybody has understood today, firstly, the technical part of HP, along with whatever I explained at the start about the entire income tax, then the difference between the charging section and other sections, then how to read charging section, right? Pragya is asking, please explain case 8. See case 8, I'll explain again, Pragya. So 1800, whichever is higher is 1000. 1000 not applicable, so 1000. Then 1100 minus 100 minus 25 is 975. Now, since AR is less than ER, I will find out ARV. How do I find out ARV? It is AR plus ER. So it comes to 1000. Now I compare ER with ARV. Now, I have already said that you will select ER as your GAV only when ER is greater. Here, ER is not greater, it is same as ARV. So you select ARV. Now, when you select ARV, ARV does not become the answer is always AR. So my final answer is AR. ER is taken only when it is higher than all figures. Until unless it is higher, it will not be taken. Is this fine, students? Clear? Excellent. Super. So with this, I sign off for today. Please keep studying at your end. Read the entire chapter from module. Yes, thank you very much, everyone, for your beautiful comments. I will also be waiting to meet you all again in the next lecture. And please, till then, read the entire chapter from the module. So when you are coming next, you come with your doubts, with your questions ready. Thank you. Thank you very much. Good night. Take care. Bye bye. Done. We can close. Thank you very much. Bye bye.